Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Gessel. He's the Chief Content Officer over Investors Business Daily, and we're going to look at the 5 things that you need to know about the stock market in 2018. Chris, thank you very much for joining us over at Nasdaq. But I think what the big question is, following a strong year that we saw in 2017, do you think that's going to happen for 2018?
Well, we've looked at the historical data, and when you have a year as big as we had on the S&P, more than 15%, you usually see an up year, but not as strong as the year before. And occasionally we'll have a down year, but the likelihood is probably 7-8% up this year.
Well, it's still not a bad return.
Not
We're just used to seeing such big numbers in the double digits, but it's really interesting. The question is it going to be more of a sector rotation type of market, or do you think we might get back into some stock picking? Because it was very highly correlated last year, which made it tough for stock pickers.
Right. Actually, I think it's going to become more of a normal market where there's the interplay between the stock market and bond market is back again. So with rates rising, and so now money has a place to flow, whereas before last year, there wasn't really anywhere to go outside the stock market. So there was a lot of sometimes violent rotation going on underneath the surface. So the S&P was only down 3.5% at its worst last year. But we saw 8 and 10, 12% corrections in biotechs and chip stocks and things like that. So that's where the corrections were happening under the surface.
Well, to point number 3 now, we saw a significant uptrend for 2017. Do you think that's the momentum that we're going to see this year, or more choppiness if you expect a smaller rate of return?
Well, I think the way the year started out was unusual. We had a very strong January after a very strong 2017, but what we had been saying beginning in December was get ready for some normal corrections, because things had been so steady for so long, not only last year, but really it's been years since we've had a 20% correction in the S&P. It's just highly likely that we'll get more normal corrections, 10, 20% corrections. So we've already had a 10% correction. It looks like the market's trying to go straight back to new highs. We'll see what happens there, but I wouldn't be surprised if we get a slightly larger correction, but that's good for the market.
Right, and that was my next question to you. Is a correction a bad thing?
No, never, never. In fact, we welcome them because they create opportunities. So when the market corrects, stocks that have been leading will build new bases. Other stocks that hadn't been participating will come to the fore. Maybe we'll get some new IPOs, and they'll start running. And so the worst thing that an investor can do is when the market goes into correction is to throw up their hands and walk away. That's when you should really be engaged and really start looking at wherever you get your ideas, and look for those stocks that are setting up and getting ready to make big moves, because that's where you can make the big money.
All right, and to wrap up for point number 5, do you think 2018 is going to be more challenging for investors?
Well, it already has been, because we were up so strong in January and gave it all back in 3 or 4 or 5 days. I'm surprised how the market has rebounded so quickly, because what we know in 2010, 11, 2015, and 16, when you vertically violate the 50-day moving average like we did, that usually means there's going to be 2 or 3 tries before you reach new highs. So we've gotten very close. Today the market's pulling back a little bit. Maybe we'll have another pullback and another try at new highs. But I think we're going to have a much more normal market, and if you're set up for it and ready, you can still do a lot of good trading in a situation like that.
All right. Well, thank you very much for joining us. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.